Hey, welcome back. It's Jason Walter here. I have big news to share, and that is that mortgage application volume bounced back last week. So according to the Mortgage Bankers Association, or the MBA, the number of mortgage applications in the US surged by 16% last week. So in today's video, I'm going to be sharing all the details with you and the implications this could have on our housing market in the months to come. In addition, housing affordability reached its lowest mark since May 2019 as home price gains have far exceeded family income levels. Also, lumber prices have been absolutely tanking lately. So for the first time since November of last year, lumber prices dipped below $600. And stick to the end of this video because I'm going to be sharing a mortgage interest rate update plus some economic news that were released today. In today's video, I'll share all the details with you. So if you get any value out of this video whatsoever, then please hit the like button. Also, check out the links below if you want a real estate agent referral for virtually anywhere in the US. And also, if you want 2 free stocks with one of those being valued up to $2,000, you can deposit $5 with Webull by clicking on the link below. That promotion ends on July 20th. Okay, let's start with the biggest news of the day, and that's the fact that mortgage application numbers made a turnaround by surging last week, in part due to lowering interest rates. The MBA's refi index increased 20% from the previous week, and the seasonally adjusted purchase index increased 8% from 1 week earlier. And again, I'm not even going to mention year-over-year changes for mortgage applications because last year the housing market was in full swing after the stay-at-home orders were lifted. In addition, the MBA mentioned that the year-over-year comparisons were down significantly for both purchase and refinance applications as they were relative to a non-holiday week in 2020. Overall, mortgage applications climbed last week, driven heavily by increased refinancing as rates dipped once again. Treasury yields have trended lower over the past month as investors remain concerned about the COVID-19 variant and slowing economic growth. Mortgage rates fell for the second consecutive week as a result, with a 30-year fixed rate hitting 3.09%, its lowest level since February 2021. Mortgage interest rates have been decreasing lately, and this could be very well the main reason why mortgage application volume increased, especially for refinance applications. According to the Mortgage News Daily, rates dropped from 3.26% on June 22nd to 3.04% on July 9th. So because mortgage interest rates decreased, that caused a surge of refi applications. And you can see this when you look at the percentage of refis versus home purchases. So according to the MBA, the percentage of mortgage applications that were for refis were 64%, so 36% were for home purchases. So what does the increase of mortgage applications for home purchases mean for our housing market in the months to come? The MBA's previous report for the week ending July 2nd showed that mortgage application activity hit its lowest level since the beginning of 2020. So it goes to show how you should not make long-term conclusions based on short-term data. And that's exactly why I rarely speculate. So short-term trends don't necessarily translate to long-term ones. However, if mortgage application numbers for home purchases continue to increase week after week in the long run, that could signify that home buyer demand is very strong and home sales are going to increase, and thus home prices could go up. However, if application numbers start trending downward over the long run, this could signify weakening buyer demand. Okay, changing gears slightly, let's talk about this big drop of housing affordability because it's getting more and more expensive to buy a house even though mortgage interest rates are near historic lows. The National Association of Realtors reported last Friday that when compared to 1 year ago, average family incomes rose only by 1.2%, while the average mortgage payment increased by 20%. The average 30-year fixed-rate mortgage was 3% this May compared to 3.29% 1 year ago. However, the median home sales price rose 24.4% from 1 year ago. On a year-over-year basis, the average monthly mortgage payment rose to $1,204 from $1,003. In other words, an increase of 20%. So in other words, a drop of mortgage interest rates of 0.3% did absolutely nothing to help homebuyers out there. Instead, it caused a feeding frenzy because interest rates were so low, and that drove up home prices by nearly 25%. Because I'm a housing market data nerd, I did some extra research for you guys. So when looking at this housing affordability index chart, May's reading dipped to 151.7. But here's the problem. This chart only goes back a year, so it's hard to tell when looking at this how low the current level is. Clearly, it's much lower than any other month over the past year though. So here's what I did. I looked up NAR's report from April 2019 to April 2020 to have a look at what the index looked like. So here's what I found. We would have to go back all the way to May of 2019 to have a reading as low as May 2021. So in other words, May's reading of 151.7 is the lowest reading since May 2019, which is a 2-year low. This means that housing affordability overall in the US hasn't been this bad in at least 2 years. This is due to record high home prices and near record low housing inventory. On a side note, if you're curious what's the most affordable and least affordable areas in the US, the Midwest is the most affordable, while not surprisingly, the West is the most expensive. Another way to show you this is to have a look at this. So the income required to purchase a medium-priced home in the West was $83,000 per year. In contrast, you need $44,000 to buy a medium-priced home in the Midwest. Therefore, you need about twice as much to afford a home in the West. In other news, lumber futures prices have absolutely tanked lately. So at the end of the day yesterday, lumber prices fell to $521, which was a 13% drop in one single day. Lumber is now down 33% in the last 7 days. As I mentioned in my video the other day, do not expect any big discounts at Home Depot or for home builders to drop their prices anytime soon. This is because a drop of commodity prices can take months to be realized at lumber yards and wholesalers. In other economic news, the Labor Department reported today that the weekly jobless claims hit a new pandemic low. In total, 360,000 filed for initial unemployment benefits, which was a substantial decrease from the previous week of 386,000. And to give you a quick mortgage interest rate update, Freddie Mac reported today that the average 30-year fixed rate mortgage is 2.88%. That's down from last week when it averaged 2.9%. A year ago at this time, the 30-year fixed rate mortgage averaged 2.98%. Currently, the 15-year rate averaged 2.22%. Sam Cater, who's Freddie Mac's chief economist, stated the following: "The summer swoon in mortgage rates continues as the 30-year fixed-rate mortgage fell for the third consecutive week. Since their peak at 3.18% in April, mortgage rates have declined by 30 basis points. While this decline is not large, it provides modest relief to borrowers who are purchasing in a market with strong home appreciation and scant inventory." So check out the links below if you want a real estate agent referral or if you want 2 free stocks. Also, if you enjoyed watching this video and if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. And also consider subscribing as well. I post frequent housing market updates so you can make a more informed decision about whether to buy or sell a house. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and I look forward to seeing you on the next video.